Hello guys, my name is Abdelkarim Ramain and I am your trainer and coach, and for today's subject I choose control trading risk. So understand that controlling risk in trading is the heart of trading. It means if you don't know what is it, or you have no idea, or you are trading for many years without having this idea of risk. Now when I speak about risk in general, hello Saba, how are you? When I'm speaking about risk, I don't mean just a stop loss, because most of the people speak about stop loss. Okay, you use stop loss, that's it. But understand that there are a lot of things that are related to controlling risk. And in this live, I will try just to explain some points. So guys, try to focus on what I say. And then if you have questions after I finish, I will try not to be long. So whenever I finish, you can ask questions, or you have other inquiries. Before I begin, guys, try to subscribe to my channel if you have not subscribed before, and try to share my videos with your friends, or with the people you know on Facebook or any other social media, in order to spread the word. For me, I'm just trying to explain as much as I can, to explain things that most of the time are neglected by traders and sometimes by investors. But investors, they look for the long run, so this kind of risk is for the long run. So here I'm speaking only about swing trading, about trading or scalping or so. Okay, so let's get some sip of coffee and then we continue. Now, hello Herman Man, thank you very much for coming. So what do we understand from risk? Now here in trading, the risk that you are going to do when you trade, whenever you buy a stock, even before you buy a stock, you should understand how much risk you have in this stock. Most of the guys think about how to make money, but they don't think how to conserve their money, which is another idea that I will present. Because making money, yes, all of us, we want that we buy a stock, it goes up for whatever it goes up, we make our money, we sell it, and this is the trade. But in real life of a trader, it's not as easy as that. Okay, it's not as easy as that. So the first thing you should always focus is, what type of stocks are you trading? Okay, so we can just begin here with, if it's okay, so okay, so let's just explain this into okay. So the first thing we can speak about is what type of you are dealing with. So this is the first thing we can see. Now second, so the first one is what type of stocks you are dealing with. Okay, so and let's begin with this, and then we can go to the second one. Okay, now So as I said, what type of stocks you are dealing with. Now, a lot of people, they have no idea. They think that stocks are the same, and they think that stocks that are like what we call penny stocks are the most stocks that you can make money with. This is the general idea that almost all the people know. But the thing is, you should see the behavior of the stock. Does it behave like a penny stock? Okay? Does it behave like a penny stock? Because penny stocks, why they move so fast? Okay? Sometimes you see stocks are flying, and when you see one of them, you say to yourself, why I did not discover that stock going from $1 to $40 in 1 month? What's the problem with me? Why I don't find this kind of stocks? Okay? And you begin calculating your money. You buy from 1 here, and then you get it to 40. This is I don't know, 4,000%. You know, some people they see the chart, but the chart, when you see it, it looks good for now. But before, if the stock is $1, you will never enter that stock. Why? Because you get scared. Okay? You want money, but you don't want to risk money in that stock. Okay? You want a trend that it is now. You see it. You see the stock, how much you make if you entered here and you sell here, but you don't want to go to the back. If you are in the past, believe me, you will never enter that stock. Okay? Because you don't see the trend. As simple as that. Now, so we said that penny stocks are one of the types, but understand that as you are going to make too much money from these stocks, if you find one which flies, like it's going up too much and you can make a lot of money, understand that this stock also you can lose a lot of money. This is here what we are speaking about, risk. Okay? That's why some people sometimes they throw all their money into one stock. Sometimes in their life they succeed. Okay? You put one guy, one of my students put 11,000. He get I think $54,000 in few days. Okay, because the stock was flying, and he get to make a lot of money. But try just a few minutes. Try to understand, what if the stock collapse? He put 10,000. The next day you lose 60% or 70% or 80%. Are you okay with that? Now here comes the idea of risk. Are you okay to risk that much? Now I understand most of the people, they say no, I can't just put my money, all what I have is $10,000. I put it in a stock, and then tomorrow I got I lost it all. I get only 2,000 or 3,000, 1,000. Believe it or not, you are not going to make from 1,000 again to 10,000 in the following trades. You will never make it like that. That's why most of the people, when they lose too much, it's the end of their career as a trader. Almost all the people who are going this way, at the end they will lose. Some people begin to take some measures to minimize risk. Okay, this is when they become when they trade too much and they begin to understand the thing. Now, if they understand this thing of risk before, they will never lose like 60% or 7 or 80% in their account. Now here, when I speak about account, I'm not speaking about the stock, because stock, you should never put all your money in it. This is a pure gambling. This is a pure gambling. Even if one stock you make a lot of money and you are happy with that, understand that all this money you will lose it in the future if you don't change the way you did it before, because the market sometimes gives you gifts without any skills. Sometimes the stock, you buy stock at $1, tomorrow you find it $5. You make $500. You say 500%. You say, oh, I am a big trader. See, I just bought one. I make $500. What is the other people that they say 10%, 20% in a year or 50%? This is stupid. This is stupid. I will just one trade make 500%. But these guys who did this at first, they think they know how to trade, but they have no idea about risk. And most of these people, if I say 100%, they will lose it all. They will lose all this money that they make in a few other attempts. They will go to these stocks again, and they lose almost all their profits, and then they lose some of their money, and then they end up criticizing Wall Street, and they say trading is a scam, these brokers are scam, stock market is a scam. You see a lot of people are whining online on YouTube and Facebook. They are speaking about stock market and how they lose all their money. It's just because you don't know. Okay? You think that you know, but you don't know. Now, we've spoken about penny stocks, and we say there is a lot of volatility. It means the stock can go 10%, 20%, 30% a day. Okay? And it can go 10%, 20%, 30% a day. So understand that the risk is too high. Okay? And if you have big money, if you have $100,000, $200,000, $500,000, if you are going to trade this, believe it or not, don't play the fool and put all your money in one stock or two or three, because if you lose, you will lose a big chunk. You will lose all your wealth. Okay? So this is not a good idea to do with penny stocks. Now, there are other kind of stocks that they move slowly. The risk is minimal. So most of the time is like brokers, some big companies. You see that stock doesn't move that much up and down. It doesn't move. Okay? Because most of the traders, they hate those stocks. Those stocks that you see, they don't move too much, but they don't have big trends. Most of them, day traders like them because they can each day see the stock is going up or going down in a day, so they don't care about the stock itself. Even the stock doesn't move like in a trend, like in swing trading, but still they can make money from them. But understand, if you are a swing trader like me, you need to have trends. If there is no or very shorter trends, exceptionally when the trends that are short, you get a lot of money. Okay, a high percentage. Some stocks are like that. Now we have other kinds of stocks that are volatile also. Most of them are IPOs. That's why in our subscriptions, what I do, I always show these IPOs. Last search, I think this weekend, I have begun showing IPOs only. And last week, I think, and the other week, IPOs, it means companies that get listed new to the exchange, to the exchange like a New York exchange or NASDAQ NASDAQ or any other exchange. So why these stocks are volatile? Because there are a lot of news. Think about it. A company that it is so famous and it is private, especially when it is a drug company, or it is like something that it is very that it is like a technology or the drug company, biotechnology or so. So these companies have a lot of news. So when sometimes when these companies they get listed, some of them they collapse, so they go down too much, so people they short them. Sometimes these companies they go up so good, it's an opportunity to buy because you will have a high percentage with this. And I show how to find these IPOs and when to buy them exactly, and when to stay and when to sell. So this is the thing that we are doing with this thing. Now another type of stocks that we are speaking about is ETFs. ETFs, they are exchange traded fund. This ETF is always following an index. It could be an industry index. It could be a sector. It could be the whole market, like Dow Jones or S&P 500 or Russell 2000. It means these three major benchmarks. People they just follow them because they show you what's going in the market. So this is the first thing what I mean by types of stocks. Understand that each type of stock has its risk, so you should always be careful not to play that much with this stock. So you should know. So Herman said delisting stock, bigger risk in penny stocks. Yes, this is one of the problems. And he says, Saba, I am one of them. Okay. So Herman Mann said delisting stocks, bigger risk in penny stocks. Now understand that when we speak about delisting a stock, delisting has to do with requirements of New York Exchange or NASDAQ. Okay, some exchange they don't like stocks that go to certain price. Okay, and they ask them to get delisted. But understand that sometimes these companies, when they get delisted, they are not bankrupt. Okay, so understand that these companies, it means if your company get delisted, they will give back your money. It happens to us with an inverse ETF this year. If you remember the 4th month of January or February, when the stock market was going down, I have bought an inverse ETF, and it was going down. It means we are making money, and it means we are making money. And one day, I find that the ETF doesn't exist in my account, and I see that the money allocated to that stock is gone. So I was scared. What did happen? This is just an ETF. It's not bankruptcy because it's not a company. It's just an index. Now later, I called the broker, and I asked him what's going on. He told me this was delisted. It means deleted by the company it has made. And your money will come back later in a few days. And yes, after a few days, I got my money back with whatever profit I have. I just got it because they delisted. For example, this ETF is $50. Now at 4 o'clock, it's $50. So they give you whatever profit, whatever you have for that position, whatever is your position. Okay, so this is the listing. But understand, if it is deleted just because of requirement, your money come back. But here is the thing. Let's say you are shorting a stock for a long time and it's going down, and you don't follow. Most of these things came to what we call investors. Most of the thing doesn't come to swing trading, because most of the swing traders they follow good stocks. It means you will not find a stock that go bankrupt and the stock is going up. It will never happen like this. Bankruptcy is a stock that let's say it was $100, $200, and then it goes to $1. And you don't see that 2 years ago this stock was $200. It happens with the stocks that we follow, and I told you guys, get out from these stocks like Sears. Now it is in the over-the-counter stocks. Okay, hello Wiseman, good evening. Okay, like Sears, like JCPenney. Okay. Because they are losing business, and sometimes the company goes bankrupt because you don't follow. Most of the investors will know, because you should know what's your companies are doing. You don't stay 10 years, 20 years, and you buy stocks and you don't see them. Sometimes these stocks go and lose business. It means if you put 100,000 through 10 years or 20 years, you have 100,000, 200,000 in this stock, in this company, and you see this company is losing business each year, and you don't do something, or you don't read what's going on in the market. It means you are not an investor. It means you are playing. So investing, it is not just buy stocks that are today good and leave them. No. You should each 3 months, at least 3 months, which is quarter. You see the earnings, you will begin to see what's going on. Is the company making money? Yes or no? If a company is making money, don't worry. Even if the stock goes down a little bit, but it will come back, or stay on the same. Because they are making money. Okay. A company is making money, it should stay in the business. But if the company is closing stores, this is a bad thing. Okay, and it has happened during the 2008 until now, like for JCPenney, for Sears, and for a lot of companies that they go bankrupt. And I will tell you something, guys. If you Google online, you will find hundreds of companies that go bankrupt. And they were in the stock market. They were very famous. But technology changes. New companies emerge with a new technology, with new ways to do business. And if some companies lose customers, they lose business. That's the simple thing I can explain. Okay. So guys, let's now go to the second thing I want to mention. So the first, we say what types of stocks you are dealing with. We have spoken about this. And the second thing I want to speak about is stop loss, just in general, okay? And then and then we can go to something wider than stop loss. Okay, so in general, the stop loss so I got a question from Herman. Is there any way to know before delisting my stock? Okay, hello Fabian. I will Herman, I will answer this later. So let's complete, because I want to finish the explanation and then I will go back to you. Okay, so we said that the second thing is stop loss. Now, a lot of people, you understand that a stop loss, especially these 2 or 3 years, it has changed, and brokers and exchanges and market makers, they have changed the way to look at stop loss. And for me now, I will do what we call mental stop loss. Mental stop loss, what does it mean? It means you don't put the stop loss directly into the broker order. Okay? Now, what is the problem that we see? I have seen since like 2 years or 3 years ago. Even if you ask the broker, ask someone who knows before, like 5 years, 7 years, because now most of the stockbrokers that they are working, most of them, they don't recognize what's going on, and they don't, I'm not saying they don't understand, but they can't explain to you things. And I have explained this before, so I will just try to explain it again. What did happen is that before, when you put stop loss, let's say the stock is $20, you put at 19. Now, your stop loss, if it is like a stop order, because a stop order becomes a market order whenever it reaches that price. But how it reached that price? If the price has really touched 19, your stock will be sold with whatever price available at that time. But the problem now, like 2 years or 3 years ago, what's the problem? The problem is that now the software they use, it has changed to look at the bids and the asks that are available in the market. And this they don't see if this has occurred in the market. Okay, so I will just give you an idea very quick, because I don't want to spend too much time here. So I will give you an idea just to understand. Okay, so you bought the stock at $20. Okay, and you put your stop loss here at 19. Stop loss at 19. And you put a stop order. Stop order, you ask, what is a stop order? You ask the broker, if the price of this stock is 20, it's okay. If it goes to 19 directly here, the stop orders becomes here a market order. A market, it means sell with whatever price. So this is the regular thing. This happened many years ago. But right now, okay, right now you understand that the bid and the ask, we don't have only two. In general, what you see bid and ask. Okay? Now, let's say today you see 20 and $20.01. This is the ask now. Okay? But for the bid and ask, you find others like 19, 1920, 1900, you find 18, okay? And the ask, you find 21, 22, you find other things, other asks and other bids. This is the market makers, what they put, each market maker, but this is the best. So in your broker, you see the best. It means the best for you. The best for you is this. Yeah, you buy at $20.01 and you sell at 20. This is the best for you. But there are other bids and asks. So what the software of the broker, what does it do? Whenever it sees a price like 19, it will execute it. Execute this. Now, when you it is executed at 19, but the price here is only 19.98. The real price, the price has not gone to that. So this is just what the market makers put. But the real price, what the stock has gone to, is 19.98. It's not 19. It's not this price. It's this price. 19.98. Okay? So what your broker do? It will sell. Now when it sells with this one. So you will see that when you see stock sold, you find 19.98. Now you call your broker and you ask him, oh, okay, I put 19 as a stop loss. How comes you sell it at 19 and you give me 19.98? It means that that 19 doesn't exist. It doesn't exist. It exists only in the bids and the asks, but it doesn't exist in the stock. And then the day, for example, like here, this is the day of the stock. Let's say it begins with 20. It closed at 19.98. It goes down. Let's say to 19.70, and here it goes to 20.25 cents. Just an example, okay? This is the day. Now, when you go to the day, you look at the list. The low price is 19.70. There is no 19. It doesn't exist in the stock market. That's why you tell him, okay, it doesn't exist. There is only 1998 where they sold your stock. Okay? And this is the problem of the stop loss that you have. That's why for me as a trader, I don't use anymore physical stop loss. Physical, it means you put it. So I use mental stock. Okay. Now, and mental. Hello, Nasa. How are you? And mental stop loss is just when before even you buy a stock, you should think where to exit if the stock doesn't go good with you. This is one of the principles of trading. It's a basic. It's not just you buy a stock and you leave it and you say tomorrow I will see. No, you should not see tomorrow. You should see now, because tomorrow you get weak, psychologically weak, when you see your stock is going down 5% or 10% or 20%. Oh, you say it is just today because there are news. But let's wait until the third day. The stock will come back. It means you begin to convince yourself psychologically that the market will be good. And sometimes now you become stubborn. Stubborn, it means you think that you are right and the market is wrong. And after a few days, you lose 30%, 40%, it's over. You begin crying, you begin whining, and you sell your stock, and you begin, and you don't say that it is your mistake. It's not the market mistake. The stock market is neutral. It's not a person that looks after you. Stock market, or the price of any stock, it's the outcome of the activity of the traders. The traders, they short, they sell a lot, the stock will go down. Traders, they buy a lot because of news or something else, or they think that the market is good, they buy long and the market will be long for that stock. So it is neutral. So the stock market is neutral. It doesn't push the stock up or down. It's the traders who do. Because sometimes you find no volume stocks, the price stays the same, doesn't change. And this you see it in some penny stocks where we have no activity. It's zero. I have showed you last week, I think, some stocks, there is no activity. Now, let us speak about risk now, about stop loss. Understand, guys, you should see by any means how much you risk in each stock. This is your job. It's not the broker job, it's not the stock market job, it's not the trader's job, it's your job. You buy a stock, if it doesn't work, where you exit. I have seen some people, which is very funny, like day traders who begin just to trade. I will tell you a story because it happened to me before, and I will just think. Okay, in the morning you begin to do a day trade. You find a stock, a news or not a news. What is your strategy? I don't know what is your strategy. It means you just go and you see a stock is going up, you buy it. After 5 minutes, half an hour, it's going a little bit good, and then the stock stops going up and it goes down. Down, 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 down. You begin to see you lose 2%, you lose 5%, you lose 7%. Now at the end of the day, it's nearly 4 and you lose 10%. And you don't want to lose 10%. You see, you put 10,000, you lose 1,000. Or you put $1,000, you have already lost $100. So you say to yourself, okay, what if I leave this stock for tomorrow? Now here is the big mistake, is you change the way you are trading. Day trading, you should sell before the market close at 8 p.m. because the real market stops at 4 p.m. But there are sometimes activity you can sell your shares after the market close. You can do that, and sometimes if the market if there is an activity like a news, like earning news or a news, the stock can go up or go down. So at that moment, since there is activity, if you can sell, okay, you can sell or you can buy as you like. For example, you see that a stock there is a gap up, 10%, 20%, 30%. A gap up, you say, okay, I just buy some shares just to look for tomorrow what will happen. This is swing trading, because when you hold a stock for tomorrow, it's a swing trading. It's not day trading. Okay? So try not to confuse yourself. Now, with that being said, understand that whatever you buy in a stock, you should know where to exit. I know you don't know for tomorrow what the stock will be doing. I know. But you think always about your risk, because your risk is taking your money. The market will take from your money. But if the stock goes up, you are taking money from others who are selling short. Okay? And the more the stock is going up, the more you market, because it is just the value of the stock that it changed. Okay? So it is the opposite. The people who, for example, put target price is only for, let's say, for what we call day traders, because they don't have time. They have only few hours. They put a target. If they meet this target, they put stop loss there. And if the stock doesn't go up a little bit up, if it go down, they sell and they make their money. This is a target. But in swing trading, for me, there is no target, because the stock can go up and up wherever it is going. So for this one, as I told you, you should think about always. You should think about putting the stop loss. It means at least you know where to exit. Now number 3. So number 3. Okay, let's change the color. So number 3 is account risk. So account risk, I have already spoken about this in many of my videos. Hope you. So account risk is you should look the stocks that have high risk. You give them less money, and medium and low risk. Okay, so high risk you give less money, medium risk you give it means average, and if low risk you give more money. Okay, this is just to make your account stable, because if you put high money here, let's say in this, you put all your money in high risk, your account will be volatile. Now, what does it mean volatile? For example, you put some stocks, two or three or four or five, high risk. Okay, let's say you have $10,000. The next day, volatile. Let's say the next day you can give $12,000. It means you have made $2,000, 2K. You have made $2,000 in the day. Okay, so it means your account. If you make your account as a chart, your account is today like this. This is here 10,000, 10K. Now your account will be 12K. So it's going so fast. But the third day, let's say you lose 5K or 6K or 3K, for example. Let's say it's just 3K. So you see 3K, it means you have 9,000. You have 10,000, it goes 12,000. Now we have 3K lost, you have 9,000. So you see the chart is very, very volatile. Okay? But in if you have less money, so your account will not be doing like this. Okay? Let's say 10,000. Next day, you have 10,000, let's say $700. Okay? And then it goes down, let's say here, you have $10,300. It means, as you can see here, your account is going good. 10,000, 10,700, 10,300. So it is not, your account is not volatile. And you can make bigger money. If you continue like this, you will be making bigger money than this. If you put high risk stocks, you will have a real problem. But sometimes high risk stocks, I'm not saying it's just penny stocks, any kind of stock that go fast, you can make a lot of money. But understand, the higher risk, you can have the higher profits and the worst losses. Okay, so higher risk is always a problem. Now, if you are more a gambler, than a trader, you should use this, because some people, I understand, guys. Potato bag, hello potato bag. Because you understand that when I'm speaking about account risk, understand that there are a lot of things you can look. Okay, it's not only one thing or two things or three things. That's why I make a training about that. Understand, guys, when I make a training, it means I specify something very, very important, and I explain into details. The more you understand risk, the more you will be profitable in the future. Okay, you will be profitable. At least you don't lose every year. This is the goal, to be a good trader, not to lose. Either you make a lot of money or you make little money, but you don't lose money. But the problem is with, you don't know risk. You can make money this year, 10%, 20% or 10%, because the market is good, because you choose at random and the market is with you. But the next year, you will be losing 10%, 20%, 30%. So this is not a trading. Okay, so see, one year you make money, the other year you don't make money, and this is not a kind of business that you stay in, and this is a real problem for you. Now, there are a lot of things we can speak about risk. Okay, now there is another risk I want to mention. Another risk I want to mention, just quick, for is market risk. Okay, so what I mean by market risk is, since we are swing traders, we should follow either the indexes that the stock belongs to. I have explained this last week. Okay, so I will just explain it. I explained also in my subscription. I give a lot of details, but here I just give you. I mention this market risk is, let's say the market is going up, then it's going down, like what happened this year, and then it goes up. Okay, so this is for example, let's say this is the Dow Jones this year. Okay, now this period here to here, this is the downtrend, okay, of the coronavirus I always speak about. Now, if we are here, you should sell short you buy options like put options, or inverted ETFs, or you trade less with minimum money. Trade less in this. Since all the market is troubled, everything is going down. So how can you go long when everything is going down? This thing that I am speaking about is so important that some people, what did happen to this to some people that I see always trading, they have this problem with the problem they have is that they think they should trade. This is a real problem. It's like opportunities. It's not just especially in swing trading. I'm not speaking about day trading. Day trading, yes, you can trade every day. Why? Because if the stock market is going down, you sell short. It's an opportunity to make money. Especially when you see bad news. Everything is bad news. Do you see the stock market is red? You take some stocks and you short them. That's the way you make money. And this is the mood of the market. The market is troubled today. So let's get some money from the market. Okay? Now, if the market is doing good and you see there is a trend in the market, here it's the time to buy long as a swing trader, as we do. And we are fortunate this year. At the first few days, I ask all my subscribers that it is the reverse. And believe it or not, this year, we work from end of March to I think September, we make 140% in our trading account with verified trades. So when I ask the guys, look for any stocks, everything is going up. So most of the time, whenever you take a stock, you will make money. That's the good thing. You should be with the market. The market is going up, you go with it. But the market is going down, you should sell short, or you should do something else, or you don't trade. Because some people, they say to me, oh, how can I stay 1 month I don't trade? Yes, because you don't know how to sell short. Everything is going down. How can you go long? When you go long, there are exceptions. Because stocks, there are some exceptions in IPOs. Because sometimes, and some penny stocks, they don't follow the market. Yes, but there are few stocks. Sometimes when we search with my search, I find 4 or 5 stocks that are going up in the whole market. Okay? I don't find stocks. It's just because everything is collapsing. Now, if everything is collapsing, you should change the strategy. Because in trading stocks, there is no way to do one strategy for every mood of the market. Especially with the 2 basic moods. Trending up, trending down. These are the basic trending. And we have the zigzag thing when a few weeks or few days the stock market goes up, then it goes down. This, I have seen it in 2018, and we have followed some smaller trends, and we made money from them, either up or down. So you guys, you should follow the market, follow the indexes, follow the stocks that you are doing, and this is how you can make money. But understand that the knowledge of when we are speaking about this. So here I have given you 4. It means I have given you 4 things to look after when you want to control risk. It means you should see the types of stocks you are dealing with. You should see the stop loss. You should see the account risk, and you should see the market risk. Now here, I'm not speaking about something which is normal, that most of the people they forgot, which is psychology risk, and this is the real problem. Psychology risk. There are some. I have seen some people who try to explain this. There are some studying psychology and professors, but they understand that they speak about risk, but they have never been trading. So it's so hard for them to understand it in real. If you put, for example, when you believe it or not, when you are into earning news, let's say you have only $10,000. You have read the analyst and they say this company is doing good this quarter. It might have a gap up. You follow the news. You follow the people what they say. Understand that the market doesn't follow what the people say. It is the traders who decide. Okay, so it's typically gambling. And you put $10,000 after the market news at 5 or 6. You look at night, you find that you lose 7%. This is called psychology risk. It means you have decided to have this major big risk. Some people, sometimes the news comes at night. It doesn't come even after the market close. You will never know what the market will be in the morning. So you'll be scared at night. Some, they cannot speak. They cannot sleep. For example, you put 100,000 or 200,000. You put a lot of money into that stock. I'm not speaking about you put $500 or $100 and you become whining. I'm not speaking about that. But you speak of big money. And then in the morning, you will never know what will happen. Is it a gap up that you make more money? Or is it a gap down that you lose too much of your money? And you will never know. Understand that earning news, you can't expect anything. But if you follow stock, if you follow stocks, most of the time you will know like 10%, 20%, or 30%. You will understand, but it's not true. You will never know first if it is a gap up or gap down. Because I have some people, they always think they know. I say, if you know, sell your house, sell your car, sell everything you have. If you know that tomorrow this stock will go 40%, today before the market close, put all your money. Sell your house with your house, for example, 200,000 or 300,000, and sell your car, sell everything, and buy today a stock that you think it goes 30%, 20%, or 40%, or 50%. No one will do that. No one will do that. And if they do that, they are the stupidest people in this planet. I'm speaking about Earth. I'm not speaking about other planets that maybe we have other creatures. I'm speaking about a human being. Because this is purely gambling. Even if you make money, this is not a trading. Because the market gives you sometimes a gift. Sometimes you buy a stock, you put $5,000. The stock is $5, or you don't know even that there is earning news. You don't know, because you should know when you are trading, like a swing trading. After a few days, $5 it goes to $10, to $15, to $20. And you think that you master the trading. You master it. It's all over. Now you are an expert. But this is just an illusion. Because understand that earning news is just earning news. It's just news. It could be bad, it could be good. Sometimes it is good and the stock doesn't move up. Sometimes it is bad and we have a gap up. You will never understand what's going on. And please, guys, do not try to find reasons. Sometimes there is no reason. it's just the traders feel that the stock should go into a gap up. They buy it heavily, it go to a gap up, although the company is not making any money. Okay, guys, I think we have finished the explanation. Let's see the guys that are here: Saba, Herman, and Wiseman, Fabian, NASA, Potato Bag, and Daddy Dodie Dobson, and yes, and Macthera. Thank you very much, all you guys who are come here. Now let's see a question from Herman. Is there any way to know before delisting my stock? Now listen, if it is a bankruptcy, no. If it is delisting because of the price, because you don't lose your money. For example, a stock was $10. Now it is 50 cents. So the exchange, if they don't accept 50 cents or 10 cents a stock in the exchange, they will ask the company to do a reverse split. And this I have explained before. Let's say your stock is $1. And after $1, if the stock goes down, the exchange doesn't want that the stock will be 50 cents or 70 cents. They don't want it. This is a rule for the exchange. So what they ask the company, they say, okay, try to change it. Do a reverse split. It means combine 5 or 10 shares and put them as one share. This is called reverse split, and I have explained it in split. Please, those guys who don't understand what is a split, go to my channel, put split. You will find a lot of videos explaining this. Reverse split is just the stock is cheap. You make it look expensive. Okay? Sometimes expensive, you make it cheap. Why? It's just because 4 reasons. So I will give you just an example. For example, Apple, it was $500 a share. So what they do, Apple, they do a split with 4 for 1. It means for each share, you will have 4 shares that are small. The big share, 500, it becomes 125. Now you can see that Apple is only 100 something. I don't remember. I don't remember now. So, but when it changes now, why do we do this? From 500 it becomes 125. Is just to make it affordable to buy from investors. Investors, they see that 500 is too much. So when it makes 125, it is attractive. You say Apple. And they do it always. When the stock goes up, they put it down. But the company is becoming bigger and bigger and bigger. Because, for example, the company has 1 million shares. If they do 4 for 1, it becomes 4 million. From 1 million, it becomes 4 million. Do you see that? It means the company has become 4 times bigger in terms of shares. But it's the same capitalization. It means the same money. The company did not become bigger in real, but it's just the shares. But the shares, if they go bigger and bigger and bigger in price, appreciation, the company try to become bigger and bigger and bigger. Understand that in 2014, Apple has made a split 7 for 1. It means the stock was $700. It goes down to 100. From 100, after a few years, it goes to 500. Now from 500, it goes to 124. You see? This is called split. But reverse split is when the company is the stock is very, very small, $1 for example, and the exchange, they ask them, okay, you should change. They do what we call reverse split. It means, let's say, for each share, it should have 10 old shares. 10 old shares. The old share was $1. You have 10 shares, which is $10. It becomes one share with $10. Okay? This is to stay. But understand that if it is delisted, your money, you can see it in the news, but sometimes it is too late. If you are an investor, you should follow these things. Because for me, I don't buy bad stocks, so I will never worry about delisting. Okay? I would never worry about that. And I don't follow news, and I have never seen news. And I have never, in my experience from 2010, 2020, it's like 10 or 11 years, I have never seen, I put money in one stock and it was delisted, except for ETF. That for this year, the ETF, which is called, I think, Ultra Pro, one of the ETFs that goes down, Ultra Pro short, one of them, it has been deleted by the company that made, because it is just an ETF, it's not a company, and they give us our money. They announced this and they took it. So, but in general, no, you will never know, because sometimes a company go bankrupt. Company can go bankrupt. Okay, so if in the morning at 7 o'clock the CEO said that today the company is bankrupt and it is delisted because the exchange has already taken the stock and give all the money to the company, all the investors will lose their money, except for the preferred those preferred investors. They give them first little money, but they still lose money because all the company go bankrupt, and they will sell stores, they will sell everything, and they fire all the people, all the managers, all the executives. They fire everyone. Okay? When whatever money you have in the company is gone. This is called bankruptcy. Okay? Bankruptcy, but bankruptcy, you should see years. It doesn't come just today. Just like at random. A good company like Apple, tomorrow they say Apple is bankrupt. No, not like this. No. It's a company that for many years is losing business. Like I told you, like Sears, like Giuseppe, like other companies, they do lose business. If you want to know, this year is an example of bad year where thousands of companies, they lost business. They lost business with the quarantine, with not going out, with curfews, with companies, they stop working. That's why we have Trump do this stimulus and for these companies. Okay, so I hope you got some information, Herman. Dodie Dobson say, will you ever have a show about long-term option trades, ETFs mainly? Yes, this is a good question. Usually, most of the time, I don't trade options for true. Okay, and I don't find a chart that it is good for options. And options, options change. And it is not like a stock. So you should just understand that options, it has a lot of problems. Because there are a lot of things included in how to make the price, and this is not shown to the people. Okay, so if there is like a 6 months option, okay, I have never done that, but for you, Dobson, for you, I will try to see one example, and I make a video for you. But I am not into options, into going long for options. We do options. For me, I do it just for a few days or a few weeks. I don't go that much, and I don't trade that much option. I am always with stocks, to be fair. That's why I don't trade it that much. Okay, so let's go to the other question. Magthira said, earning report trading. What you think, Magthira? I think I have explained this earning news. Earning news, the company makes the announcement most of the time after the market close. The analyst, Magthira, I will just go very, very quickly and explain this again, because I have explained. And Magthira, I will suggest to you, Magthira, I will suggest to you, when you finish, go to my channel, put earning news. You will have a lot of videos explaining this into details, because I can't go into details now because we are doing risk. But I will just try to explain to you in general. To explain in general what is this thing. Okay. Now, XYZ is a company. Okay. They announced today. Let's say, see, what is it today? Okay, it's October. Okay, October 25th, 2020. This is today, Sunday. Now, the company announced that in, for example, let's say 10 November, after the market close, they don't say which time, but let's say we don't know. Let's say at 5 p.m. they announce. Okay, here. Now, what the company does? It announces what? It announces the quarter, 3 months. It means 3 months of earnings of the company, the real money. How much the company has made in the last quarter. How much money? Okay? Let's say it said that makes $2 a share. It means if you own a share, you would make $2 for example, the share is $10. Okay? $10, and you have 100 shares, so 100 multiplied by 2, normally you get 200. But this, you are not getting this money. This is just virtual. This is virtual. You are not going to get this money. This is the money that the company has made, not you. You are not getting nothing. So we said $2 per share. Okay? $2 per share. Now, on the 5th, they announce that $2 per share. Now, the analyst here, before the 5 analysts, before the 10 November here, in this period, from 25, they will announce each one. For example, they say it will get $1. Now, $1 is less than $2. It means it is double. It means the analyst, when they say $1 and it's given $2, what does it mean? It means it is good news for the company. Now, good news, after they hear, the traders, they hear, almost these traders are day traders. Day traders. At 5 o'clock, they begin to buy too much. They buy. The stock is $10. Tomorrow you will find it, for example, at $20. This is how the news works. So you have no way to know before 5 p.m. No way. Even if the people speak that it is good or it is bad, it doesn't matter. You will never know. Now, what if these $2, they say 50 cents, and the analysts say it's $1, it's the same, but the company say it's 50 cents. What does it mean? It is bad news. Now, what the traders do in general, these $10, it is changed to, for example, to $8. So the people will lose money. They lose 20%, $8 from 10, it's 20% they lost. You have a gap down. Now, this is what we mean by earning news. So this is what we call the earning news, and understand that before we have what we call insider trading. Before, there are some people, this before 1934, before the Exchange Commission was created, before there is a big play. If you know the company or an executive and you know the information, the last day, the day before the announcement, you can buy a lot of money and you are sure that tomorrow we have a gap up. This is called insider trading, and it is forbidden in 1934. So no one is doing that today, because anyone who is who they think they know, because each time earning news he knows, they can inspect, they can put an inquiry on him, and if he gets guilty, he will have a lot of trouble. Okay, but this guys is no more thing. That's why I told you earnings is a gambling. So if you are going to gamble. You are free with your money. Do whatever with your money. Because why I am doing these videos? I am just trying to educate you on how to preserve your money, control your money in order to make money, not to lose them in one day. And that's what the people do. Okay. Potato Bag said, company receives a 90-day notice to bring the stock price to $1. Yes, it could be. So I don't know exactly how the procedure. I don't follow, because listen, Potato Bag, I am not following news. I am not following the companies that they go bankrupt, and I am inquiring about that and how, and I don't care. I don't have time for that. For me, I am just searching for stocks. They are good. I buy them. After a few months, I make money, then I buy another stocks. I don't care about a company go bankrupt or company make money. Because when the company makes money or they go bankrupt, it doesn't affect me. I am not affected except if I bought this stock. And it should be from a broker or something. They will notice you if there is something strong, like if there is like this notice, the broker will send you an email. They say, okay, this company, it might be delisted. But even if it is delisted, you get your money back, because it's not bankruptcy. Bankruptcy, no one will tell you because even the broker doesn't know. The CEO comes in the morning and they say the company is bankrupt. What can you do? Nothing. The stock tomorrow you don't find it. Your money is gone forever. I have taught someone, I told you about this experience, who has 250,000 put a company. After a few years, he doesn't see. He thought that the old ways of doing business. He thinks that buy a company that it is good now and leave it for 20 years, 30 years, 40 years and become millionaire. But unfortunately, after a few years, it goes down, goes down, goes down. He doesn't see it. And the bank that holds his money, they don't tell him anything, or they don't send him an email, or they don't call him. You say, oh, this company is doing bad. Are you going to stay or to sell? But for them, they don't care. They don't care. Now that's why you should care of your money. No one will care of your money. You do whatever with your money. You are free. In stock market, you are free. Buy options, buy inverted ETFs, buy penny stocks, buy go to futures, do forex, do options. You do whatever you want. They let you free, which is very good. It's a big freedom. But man, you are playing with your money. You are playing with your money. If you don't know how to conserve, how to control your money, how not to lose too much, you will be wiping out your account in a few months. And this is what happened to a lot of people. Okay? It happened to me with RGSE that got delisted. Yes. If you got delisted and it is just price, they will give you your money back. I am sure. But if it is delisted because of bankruptcy, no money for you. I hope you get your money back. David MG, thank you very much for coming. Very interesting channel. Learning a lot about stocks. I am more into forex trading. Yes, forex trading. You know, when you see the chart and you take this forex pairs, dollar or euro, it's the same. If you are a day trader, if you are day trading forex or stocks, you will see the same thing. It means something going up, something going up. There is a trend or there is no trend. But forex, it's a leveraged vehicle of making money. Leverage, it means with a small money. You can make a lot of money, but you can wipe out your account very quick also. So you see, it's you are into more risk. So futures, options, and forex, and Bitcoin, cryptocurrencies. All these are what we call leveraged vehicle of making money. Stocks are not, except when you do margin account, when you borrow money to trade. This is leveraged. But in other things, these are leveraged and they have a high risk. Okay, so thank you very much for reminding me, because I didn't put this kind of thing of risk. But because I'm not speaking about forex and options and futures, I don't want to put them here because I'm always speaking about stocks. Now, Potato Bag, I didn't know that. Thank you. Yes, thank you very much, Potato. Makthira, thanks for your great explanation. Have a good night. Thank you. Yes, it is 1 hour 24 minutes. So, guys, if you have another question about risk, please. Can you ask me a question now? If not, in a few seconds I will close this and see you next week. I'm just trying to. So, guys, I always do the search for you guys who are not subscribed to my thing. for my subscriptions or for my training. I have a lot of training and very, very specific training. If you have the time to go to my website, okay, just go there and check the training, trade the subscription. Maybe you get interested what we are doing. Now, if you need to contact me, always, I have istockmoney@yahoo.com. Just send me an email. Maybe you remember something you want to talk about, but you didn't remember right now. Send me an email, whatever you ask, and I will try. At least I will try either to make you a video or to send you to videos before. Okay? And David MG said, what percentage of risk you take per trade? No, listen. David MG, there is no what we call a fixed percentage. There is no. It depends on stocks. That's why I made, if you go, for example, to training level 6, by ebook or by videos, you will explain, you will get the details, or you be a subscriber and I will explain this for you, because I have explained a lot in my subscriptions. Understand that a penny stock is not like a normal stock, so the risk is not the same. I will give you just a hint. I'm not going to give you a lot of information. For example, a stock that it is going 10% daily. Each day it goes 10%. Are you going to put 1% risk? No. Because tomorrow, just in the beginning, you exit. You understand this? This is one of the things. But understand, but I understand, I don't do. Okay. Potato bag, any audiobooks? Yes. Potato, you are the first to tell me about audiobooks. I have never thought about them. But understand, some people they like to listen to some information, but most of the people they like to see something, to see a chart, to see explanation written, to see whiteboard, to see something like that. But potato bag, please send me an email and explain to me this, because I have never tried that. Because the ebooks I write text and they show, I put a lot of explanation and put the charts in color. In videos I explain by a chart, I explain by like I explain here. I use this blank whiteboard and I explain everything so you can understand better with visuals. But talking just like talking about things, I have never thought. So please, potato bag, send me a link or two of some others who are doing audio, because I have never done that. Never. It's new for me, but it's a good thing to tell me. Okay, guys, thank you very much for watching. If you have more questions, send me an email or check my website. And please, if you are not subscribed to my channel, please subscribe to my channel, or share my videos, the video that you like. If you want to watch my channel, you go to videos. We have about 2,300 videos. Just take any video. If you like it, share it with other people. Thank you very much, Potato Bag, and see you next week.